Welcome, everybody, to our next keynote speaker at the SNN Network Summer Virtual Event 2021. I'm your host, Robert Kraft, the host of the event, as well as the Planet MicroCap podcast. And I'm really excited to share with you today our Q&A keynote with Perth Tolle. She is the founder at Life and Liberty Indexes. And today we're going to be talking quite a bit about emerging markets, how it's been affected by COVID-19, some recent news, especially pertaining to China, which we were just talking offline, that there might be a couple bombshells that will like blow your mind that we might talk, but enough pumping it up. With that, Perth, it's great to see you as always. Thank you for joining us today.
Great to be here. Thanks for having me.
It's great to have you. So for those who may have missed any of our previous podcasts that we've done together, can you give a brief description on the Life and Liberty Indexes, as well as what you mean by freedom weighting, and then we'll go from there.
Yeah, so Life and Liberty Indexes is our firm which provides freedom-based indexes, and these are indexes that are being used in one ETF and SMAs. So the meaning behind freedom weighting is most emerging markets or most indexes are market cap weighted. In emerging markets, this causes a huge concentration in very unfree markets. You have typically 40% weight in China alone, additional weights in Saudi Arabia, Russia, Turkey, Egypt, and so forth. So because of the nature of emerging markets, there are just a lot of autocracies there, a lot of countries just coming out of autocracies. So there's a lot of risks in concentrating a huge amount of your money in those types of markets, as we're seeing today, especially with China. So freedom weighting kind of solves that problem, because you're giving the higher freedom countries a higher weight, lower freedom countries a lower weight, and the worst offenders as far as personal and economic freedoms are excluded altogether just naturally as a result of that freedom weighting.
Absolutely. All right, so let's go down that rabbit hole first. We'll get to some other things in a little bit, but the main thing making the news in the last couple of weeks here is everything coming out of China, the massive sell-off and then the buyback. So as my main emerging markets expert, please, like what's been going on? Can you give us kind of a wrap of what's happening?
Yeah, so China, as you know, a few months ago scrapped the Ant IPO. And then afterwards, or shortly beforehand, Jack Ma pretty much disappeared from view. We still don't know where he is now. So there began to be, talk of a crackdown on China tech. And in fact, that did happen. All the China tech entrepreneurs stayed very quiet, and some of them, pledged, allegiance to the party and compliance with any regulatory actions. Some of them, like Meituan's CEO, actually, he posted something on his social media site. There's no Twitter or Facebook or anything like that in China, but he has his own social media site, and he posted an ancient Chinese poem. And that day, it was a poem about an old emperor who wanted to crack down on intellectuals and burned all the books, but then he ended up being overthrown by illiterates. So people saw that as a political statement, and his stock, Meituan stock fell something like 16% that day because he posted that poem, and he deleted it. But it's still, that shows you the degree to which people are reading the regulatory environment over there. And I'm calling it regulatory environment because it's government actions, but there's just no word for what's going on over there right now, kind of in our like regular Wall Street vocabulary. And then when Didi came public, a few days later, China cracked down on them and said they shouldn't have gone public, and they knew that there were some issues, and that the regulatory authorities did not approve, the listing. And so Didi's stock went from 18 to, I think it's now 10, but it went down to 12, I think, as a result of that action. And then they banned them from new registrations and so forth. A few days later, ByteDance scrapped their IPO, and a bunch of other companies scrapped their IPOs in the US. And then a few days after that, the education sector, and these are publicly traded ADRs, education names in the US, like GSX, EDU, and so forth. So these are companies that were public traded in a lot of US ETFs. The Chinese government came out and said all the education companies now have to become for profits. You're banned from basically making a profit. You're banned from raising money in the US, or raising money in general. So they basically nationalized private education companies that are publicly listed, on some of them on US exchanges, and some of them on other exchanges like Hong Kong Exchange. So those companies went down about between 50 and 70% on the day of that news, and they continue to slide. After that, there's really no financial return that can now be expected out of those companies. And they could also be forced to delist, in which case, that's obviously a worst case scenario, because there won't be any chance of recovery for those investors. So, and now today they're coming out, or yesterday, they try to soothe investors' fears by, telling everyone in China, hey, we're not going to stop any listings in the U.S. actually. So, but please buy stocks. And so the national team came in, and Bloomberg reported on this and supported or stabilized the market. The stocks went back up, and then today they're coming out and saying, well, as far as Didi, we'll reimburse all the investors for what they lost, and they're probably going to have to delist. And so it's just a complete government intrusion into private markets that, for most of us on Wall Street, we probably miscalculated this risk of investing in China, because we just can't imagine that even the Chinese Communist Party would sacrifice growth and returns in this manner, just because of a perceived risk.
I mean, it's such an egregious move, like that you never thought would happen, right? I mean, this is wild. Like, I mean, have we ever seen anything like this before?
I haven't. So, I mean, well, actually, I take that back. There was a company that I had my friend invested in. That was a company that translated the Wall Street Journal into Chinese. This was a long time ago. And it was like Wall Street Journal.cn or something. And all this company did was translate Wall Street Journal articles into Chinese. And so he invested in this company. It went up a lot. And then one day the Chinese government was like they wrote, Wall Street Journal had an article that the government didn't like in China. And so they shut the whole company down. And in one day that stock went to zero. So that it has happened before. And also historically, there was a time when China did kind of, and this wasn't, I wasn't in the business this time, so I don't remember this. This is all, I talked about this with Meb on his podcast recently, and he talked about this, where China just shut down the market and was like, thank you, goodbye. So that's, apparently it has happened before, but now we're seeing this kind of direction going that way again. So China liberalized a lot in the last 30 years as far as their economic freedoms, terrible on human freedom still. But economic freedoms, they did experience some liberalization, and they experienced a lot of growth from that liberalization. And now that pendulum is completely swinging the other way very quickly and just very drastically. And, even though they've now come out and said, we want to ease investors' fears, we're not going to get in the way again and all this stuff, people are just not convinced anymore.
I mean, what are some of the reasonings for that? Why are they tightening up economically? What's happening there? Do you know?
I don't know. There's speculation that there could be, an authoritarian government typically, will only receive or is only responding to perceived threats. This is not like a grand strategy. And some people will look into it and say, well, if you read the 5-year plan, you would know that this could have happened. Okay, well, where were you before it happened to tell me that, right? So nobody actually knows what's going to happen next, because the authoritarian governments, they don't know what's going to happen next. They're just responding to, whatever the next perceived threat is. As far as Didi and, the tech companies, they have troves and troves of data that for some reason right now, the government is perceiving as a threat. So there has been,
that's what I was just going to ask. Is like, what is that perceived threat from them?
it's
So I
the
guess
data.
it's the
Yeah.
data.
Yeah.
What,
But why?
sorry, you were saying.
Yeah. So
It's just
why is
like
data
we're
threat?
both like, what?
Yeah. So, there's been some blog posts going around on China Twitter that there was a time when there was a hacking scandal that was traced back to government officials in China because of his ride-hailing receipts. So it's like his Uber receipts back and forth between the hacker's apartment and the government office, showing that this hacker was connected to the government. So that's one possibility, is that these receipts are not something that the government wants to become public. So I don't know though. That's just speculation. That's on the internet right now. That's one issue. So there's a lot of data that all these companies have on everyone, including government officials. So I don't know if that's what's causing all of this angst, but all of a sudden the data become a national security issue. They actually made it into a law like overnight. Data is now a matter of national security. You cannot share this with American regulators when you're listing on their exchanges. Meanwhile, American regulators are saying you have to now share with us the same audits that everybody else who lives here shares. Chinese law says you cannot share any of this information. It's all national security. So the two laws are in direct conflict. And I think Chinese authorities are realizing America's not going to let up on this anymore. And we want to, and this is from Carson Block at Muddy Waters. He went on CNBC and said, I think the regulators in China are realizing that this is not going to be allowed in the US anymore. The companies are going to have to share their audits and their information, and we don't want the US to have that information. So we're just gonna say we dumped them instead of getting dumped. We're not allowing our companies to list on your exchanges anymore, because they know that the exchanges are probably not going to list them anymore.
I mean, it's about time, like this reminds me of remember the 2010, 2011 range when there was all the China frauds. I mean, one of our keynotes, Maj Suidan, he'll tell you all about it, and uncovering quite a bit of these frauds. And so, and now just not just the horrible auditing practices. So, I mean, it's about time.
Yeah.
Right? I mean, it's crazy that it's taking this long.
It is. And I think it's good that all this is coming into the light so that investors are realizing what risks they're taking. I mean, there may be a price at which that risk is worth taking. Now, as far as we go, we still don't have any China exposure, and we don't believe there is a price at which that type of risk is worth taking for us. But there may be, for some, there may be a price, but as long as you're, calculating that risk correctly, which I think people have not done in the past on Wall Street in general, and now they're seeing the risks more clearly, and so we can better calculate the risk, and I think that's good.
Absolutely. I mean, so what does this mean then for China as an emerging market? I mean, as you said, it's not part of the index because there's many other issues, especially on the human capital side.
It's not part of our index.
Right.
It is a big part of most emerging markets, and it's like 40% of VWO, the Vanguard emerging markets. About 30. It's between 35 and 40% of the others, and it's also the same percentage in even ESG indexes. So what this means for emerging markets is that it is going to drag emerging markets down with it as well. Most broad emerging markets. So we are not completely immune from that, because every company does, in the world pretty much almost, does business with China and does trade with China, and we don't penalize free trade because we're for all kinds of freedoms, and that's part of economic freedom. Now, if you're a company that's trading with China, you can choose to stop trading with China. You're not answering to the Chinese government, so that's fine with us. We're okay with the benefits of trade, right? So we still have that indirect trade exposure, but most emerging markets indexes will have that indirect exposure as well as direct 40% China on the ground, domiciled in China, answering to the Chinese government exposure. So it's a lot of exposure that most emerging markets investors, unless they're using a product like the FRDM ETF or one of the ex-China ETFs. There's several out there. I think the biggest one is from iShares. Of course, we prefer freedom weighting because it actually gives a higher weight to the freer countries, which we believe will be the higher growth countries in the future going forward and in the long run. But yeah, I think in general for most emerging markets investors currently, the way they're invested is going to drag down those kind of returns in the long run, because now that risk factor has come into light, and that's going to have an effect.
I mean, this is a huge deal. I mean, I don't want to, we don't want to mince words here or like, be overreactive, but you think about like this could be kind of a first step in limiting all sorts of other things, especially with regard, because seemingly this is more like kind of a dig at the US, especially to start. But you think about all the industries that do business there, from, on the tech software side with Apple and, movies and the entertainment industry. I mean, could this be kind of a first step that limits some of these other industries that really rely
I mean, a lot of
that?
those industries are already limited. And I think, like Hollywood caters to China a lot. And so that's why they can only make, like superhero films, because it's non-political. So there's a lot of superhero films, but, they can't do anything political or that has any, other, perceived political meaning. So we're already affected. You can see companies like Nike coming out and making apologetic statements and things like that. It's very difficult to do business there in that environment as it is. But I think also, going forward, like this is a great example of how all freedoms work together, because that education crackdown on the education companies was because of the demographic crisis that's going on in China, this demographic time bomb due to another bad policy, the one-child policy, which was in place for 30 years, which I'm a child of. And then they changed a two-child policy and nobody had more kids because the whole culture of our generation has changed. And they're trying to decrease the cost of childcare by making all private education companies nonprofits. Well, you can't fix one bad policy, the one-child policy, with another bad policy. The one-child policy is has to do with reproductive rights. Those are personal freedoms. Shareholder rights and private property rights are economic freedoms. Both work together. All freedoms work together like parts of an automobile. And this is like they're trying to fix a transmission by ripping out a steering wheel. And so they're trying to fix one bad policy with another. You can see by also their other policies what's happening in Hong Kong, right? If they're going to crack down on the goose that lays the golden egg as far as economic growth goes, and make it, bend its knee to the party at any cost, right? Then how would they not do that also to every business in China, every listed company? And you can't just avoid it by excluding state-owned enterprises. Every company in China answers to the state the same way as a state-owned enterprise. You can see that all these crackdowns have happened on non-state-owned enterprises. So yeah, I think this is a very interesting situation to be living through right now.
Yeah, to say the least. I mean, we'll definitely keep monitoring. But to bring it to kind of microcap land, which is our microcap show. I mean, how does this affect some of these, microcap companies that maybe have operations in China or US listed with China operations? I mean, how does this affect them?
Yeah, so on one hand, microcap companies are at the same, we'll call it regulatory risk, or, it's actually like autocracy risk, right? Like government intrusion risk. So that's a risk that's always there, but I think microcap investors are more used to that than probably most of this wipeout risk. Like you can completely get wiped out anytime. But ironically in China, the bigger you are, the more the target on your back, because the government will only crack down on you if they perceive you to be a threat. And microcaps sometimes may not be considered a threat because they're less visible, right? If you're Alibaba, you got a big target on your back, right? That, we don't know, where's Jack Ma, right? So ironically, the large caps are at a bigger risk than the mid or smaller microcaps in China. So it's
that's
the index investors in these market cap weighted indexes that are at the most risk here.
wow. I'm sorry. When I talked about big bombshell, for me, that when you told me that offline, I was like, what? Like that's wild.
Yeah. No, I have a fund manager friend in China who his firm is in China, and he tells me, yeah, we try to stay under the radar. Like as long as you're not like one of the biggest companies, you're less of a threat. So it's better to operate that way.
What's the perceived threat? Is just like because they're making more money, they
Yeah.
have more power, more influence.
Jack Ma was a very charismatic leader, and
I see.
and people loved him maybe, and what he said sometimes looked up to him as more of a leader than some of these party members, I guess. And when he said something that was perceived as a criticism to the government, that's when all this happened. And all of that crackdown on Alibaba was all because of something he said at a conference.
So that's wild. I mean, where is he? What's
I don't
happening?
Know. I don't know.
How is this not getting more play in the U.S.? I mean, I know there have been articles written. I'm not saying it hasn't gotten anything, but like literally, why is this not the biggest story in finance right now?
I mean, I just feel like this week it's been like whack-a-mole with the China stories, like you just like one after another. So this week it's been very good coverage actually, because it just keeps happening. But I don't know if anyone can report about Jack Ma, because nobody knows where he is. There's nothing to report on. Like, so.
Well, and by the way, for context, we're recording this on what's today, July 29th. So who knows? After there may be more information after we publish this. We all just hope he's okay. I mean, at the end of the day. All right, so I think we've kind of tied the bow on what's happening with China and whatnot. I mean, it's an ongoing, just monitor it closely. I mean, it's fascinating, but also you have to be very, very cautious if you do play in that arena. But another thing I wanted to talk about is, I mean, look, last time we chatted was, we published our podcast interview, just me and you, on May 13th, 2020. And then you were actually on our Planet MicroCap podcast live episode last year around this time in August. So we have a little bit more data, and we're seeing a bit more about how COVID has affected emerging markets, not just China, but in global emerging markets. So what have been some observations from your perspective, or based on some of on the index, that you've been seeing, and how some of these emerging markets are doing and or recovering or not recovering? Where are we at?
Yeah, that's an ongoing risk. Emerging markets in general are faring worse than developed market counterparts right now because of the less vaccine availability in some of these countries. So, but some of the emerging markets have handled it very well. Like Taiwan had an outbreak, and that's pretty much under control now because of all the help that they had with vaccines. Taiwan is another issue that China investors should be probably aware of, and I think they are. So China actually tried to get in the way of some vaccines from Germany going to Taiwan. So there's always that political risk there. China's always trying to mess with Taiwan, right? So they always trying to get in the way there. But Taiwan ended up getting a lot of vaccines from Japan, from the US. So and they've got that situation pretty much under control. There is also a lot more trust in the government in Taiwan than there is in China, and there's a lot more transparency. So we know exactly what's going on. So with COVID, I mean, there's also a outbreak in China now, and we know that from on the ground reporting and things coming out, but not from major outlets, because that's not allowed to be reported in China. So we don't know what's going on there. And I think the lack of transparency is, also needs to be factored into any of the risk assessments that investors do on Chinese companies. And there's just this whole lack of transparency, which is why most people don't like to invest in emerging markets in the first place. And this is just going to exacerbate that, because China is such a huge part of emerging markets. But yeah, I mean, emerging markets are going to have issues as far as COVID. And that's just ongoing. I don't know what's going to happen there, but I think as long as we have transparency of data and information, that's the key that I'm looking for when I'm investing in these different markets. So yeah, I don't mind if they have COVID going on. Everybody has COVID
Right.
going on, but do I know what's going on? You know, so that's kind of what I'm looking for there.
Very good. All right. So my next question for you is, the index was reconstituted. The Life and Liberty Index was reconstituted on June 30th, 2021. Were there any surprises that you saw in there? New entrants, noticeable drop-offs?
Yeah, it was the rebalance is actually once a year in January. So oh yeah, reconstituted. So yeah, no, we don't add drop at in June. So we do that in January at the rebalance. But yeah, okay. there were some surprising. There were a couple of surprises this year. So India was dropped this year because they had some declines in their press freedoms. There was some government kind of influence on the media, and they had some additional repression of their Kashmir peoples, and some quelling of protests by shutting down the internet in places that they were expecting protests. So because of their score dropping, and we do a relative freedom scoring methodology. So if another country's, you don't have to be like, there's no line in the sand as far as you have to be above a certain line to be included. You just have to be above your peers. So since they dropped, Brazil got added, even though there was no change in Brazil's score. So Brazil was added, India was dropped. Brazil has a very small weight, like 3 to 4%. Malaysia was added, and Thailand was dropped. So that was less surprising to me. But yeah, that's the ad drops this year. Some years we have no change at all in the countries, and they just go back to different weights.
Interesting to see Brazil get in there, especially with everything that they've been going through.
Yeah, Brazil previously wasn't in the index.
Right.
For as long as we've had the product trading, but yeah, they made it in not because of any improvement on their end, but because of India being dropped. So hopefully we'll see some improvements there. But that's one of the very small markets in South America. Chile is a much bigger allocation in South America.
Okay, all right. Well, to close out today's Q&A keynote, what would you say are some things to look for going forward from emerging markets? Obviously, just monitoring everything that's going on in China, but let's say outside of China, what else should we be looking at?
Yeah, so I mean, we think that the markets that are set up for growth are the ones with the conditions in place on the ground for feedback loops and wealth creation on the long run. So we talked about COVID, right? So remember when COVID first hit the United States and everybody was like, there's not going to be enough masks. So at first they were like, don't wear masks unless you're a doctor or something like that, right? So, but then everybody started selling masks. Like Etsy was filled with masks. Like there were masks everywhere. I think Gap became the top seller of masks. So the private sector, like people on the ground, responded to that need and filled it. So that's, the market at work. And now we have a huge surplus of masks. So now we kind of need to go the other way. But those are the types of feedback loops that need to be in place for wealth creation and innovation, right? So, and those are the types of things that will solve problems in the long run. So this, COVID, the government could not have predicted that all these people would be selling masks on Etsy or whatever else we did to respond to the crisis, right? But people in their own, creative ways decided that. And we want to be in the markets that capture those surprises that arise from human creativity. And so that's why we invest in the freer markets where people can be free to respond to these feedback loops and not just, invest based on government dictates, right? So, so I would say in the emerging markets, especially where these freedoms are not guaranteed, and where most of, or at least half of the emerging markets are autocracies, especially if you market cap weight, I would encourage looking at the freer emerging markets, and we have very high weights in Taiwan, South Korea, Chile, Poland, so it just depending on their freedom levels. And so also, I think for investors, it's important to remember that we have the power to direct assets, and that is a position of privilege. And so, the way that we invest also can change outcomes in certain places. Some people ask me, well, if we invest in Taiwan, what if they get invaded by China? First of all, if Taiwan gets invaded by China, China's market would be affected worse than Taiwan's because of instant worldwide sanctions on China. So with 40% allocation to China, you're a lot more exposed to that than our 20% of Taiwan. Whereas if you have 40% China plus 15% Taiwan, right, in the cap weighted indexes. But investors also can realize that by not investing in the countries that are causing these issues in the world, they can actually change these outcomes in the end, and not give these countries any more legitimacy through throwing our economic heft behind them, and also by kind of decreasing their costs of doing business in a way that puts state interests before those of other shareholders.
Absolutely. And I think your cat agrees with everything that you just said.
Yeah, she's back there. I don't know what she's doing.
No, she's fine. It's all good. She's fine. All right. So before I let you go, I have one more question. Okay. So what country or region that's not currently in the index is one to potentially look out for when you do rebalance in 2022?
So Colombia has been on our radar for a while, and wow, she really jumped off there.
Maybe she doesn't like Colombia.
She's after something. Yeah. She's not in agreement. So Colombia is a market that has kind of taken a lead in taking in refugees from Venezuela. Venezuela is the most unfree market based on our data set, and so a lot of people are fleeing to surrounding countries, and Colombia has really benefited from that influx of immigration into their country, that fleeing the situation in Venezuela. So they're also cracking down on some of their kind of drug trade and things like that. So we are watching Colombia closely.
Very good. Okay, I'll leave you there. You give some great information. Perth, where can our audience go and find more information about you and the Life and Liberty indexes? Yeah,
so our index site is lifeandlibertyindexes.com. I'm on Twitter at Perth_Tolle, and I'm on LinkedIn as well.
Very good. Well, Perth, thank you so much for joining us today. It was an absolute pleasure. Good luck, stay safe, and I look forward to our next update.
Thanks for having me.